In today's rapidly evolving landscape of cryptocurrency, several stories are shaping the market. From Ethereum's steady performance amidst high attention to the volatility surrounding Zora, the implications of regulatory changes in Kenya, and the momentum of tokens like Vine and Solana, these developments are crucial for investors. Here are today's top 10 stories you need to know. Ethereum, one of the most watched assets in the cryptocurrency space, has seen its price hold relatively flat, with a slight change of negative 0.3% over the last 24 hours. Despite this lack of major directional movement, Ethereum remains a focal point for traders and investors. The continued attention on Ethereum suggests a market poised for potential catalysts that could drive future price movements. This trend indicates that investors are positioning themselves strategically, likely in anticipation of upcoming developments such as ETF flows or news from the Layer 2 ecosystem. With Ethereum trending high, it signals a structural interest from investors rather than purely speculative trading. The market is currently in a state of waiting, where participants are keenly observing for the next significant event that could induce volatility. Ethereum's resilience in maintaining high attention without substantial price changes highlights its role as a market benchmark. The question now is whether this attention will translate into a breakout or if it will remain stagnant for the foreseeable future. Zora, a trending cryptocurrency, has experienced a considerable price decline of 8.8% in the last 24 hours. This volatility appears to stem from a mix of speculative trading and profit-taking within the market. As Zora garners attention, its sharp price movements reflect both interest and caution from investors. While the token's recent performance suggests a narrative-driven approach, it raises questions about the sustainability of its growth. Investors are now evaluating whether the attention Zora receives is based on genuine product usage or merely a temporary spike in interest from social media trends. This situation exemplifies the challenges of navigating a market where emotional trading often leads to drastic price fluctuations. As Zora seeks to stabilize, the next steps for investors will be critical. Will this token find a path to recovery, or will it face further declines as sentiment shifts? Vine has emerged as one of the strongest performing cryptocurrencies today, with an extraordinary price increase of 86% in just 24 hours. This dramatic rise positions Vine as a high beta mover within the market, attracting significant attention from traders. Such a significant price change often indicates either speculative trading driven by retail interest or a thin liquidity situation. The rapid ascent of Vine raises both excitement and caution. While investors look to capitalize on the momentum, the potential for liquidation risk remains high. The question now is whether this surge is accompanied by sustainable developments or if it will prove to be a fleeting moment of enthusiasm. As traders monitor Vine's performance, the implications of this jump may extend beyond immediate profits, affecting broader market sentiment and trading strategies. How Vine will perform in the upcoming days will be closely watched by stakeholders. Solana is gaining recognition as a high-throughput alternative to Ethereum, positioning itself as a significant player in the crypto market. The blockchain has recently surpassed Ethereum in terms of raw transaction volume, highlighting its growing adoption. With the upcoming Alpenglow upgrade, which aims to enhance transaction finality and speed, Solana is poised to strengthen its appeal for various applications, including payments and trading. This upgrade could provide the necessary infrastructure to support increased usage and investor interest. As Solana continues to capture market share, it represents a compelling narrative of innovation within the cryptocurrency space. The shift in perception around Solana indicates a broader trend towards diversification in blockchain technology, as investors seek alternatives that offer efficiency and scalability. The next phase for Solana will be critical. If the upgrade delivers as promised, it could further solidify its position as a leading platform in the industry. The anticipation surrounding a spot Solana ETF application is one of the most significant institutional catalysts currently in play. As the deadline for SEC decisions has passed, market participants are eager to see how this application will unfold. The prospect of a Solana ETF could not only attract institutional investment, but also enhance the legitimacy of the cryptocurrency in the eyes of traditional investors. ETFs have historically been pivotal in shaping market sentiment and drawing in capital flows. The attention on Solana reflects a growing curiosity from institutions, driven by solid retail engagement and the potential for regulatory clarity. If approved, the ETF could create a new wave of interest in Solana, propelling its adoption further. Investors are now watching closely for any updates regarding the ETF application, understanding that its outcome could significantly influence Solana's market trajectory and institutional participation in the broader crypto ecosystem. XRP continues to be a focal point in the cryptocurrency market, particularly following Ripple's landmark legal victory that has reshaped its regulatory landscape. This recent ruling determined that XRP is not a security when sold to retail investors, a significant shift that has propelled institutional interest in the token. Historically, Ripple faced intense scrutiny from the SEC, which claimed that its sales of XRP constituted an unregistered securities offering. Now, the partial resolution of this legal case has rekindled confidence among investors, highlighting how legal clarity can significantly enhance a token's investability. Furthermore, the pending spot XRP ETF application introduces another layer of potential growth for the token, promising broader access for retail investors. As market participants evaluate these developments, XRP stands to benefit from compliance-driven capital flows that could further legitimize its use case. This situation underscores the critical role of regulatory frameworks in the cryptocurrency ecosystem, as they can either hinder or facilitate investment. Investors are particularly eager to see how these legal and regulatory dynamics will evolve in the coming months. Bitcoin continues to hold its position as the anchor of the cryptocurrency market, boasting a market cap of around $1.45 trillion. This stability is particularly noteworthy as altcoins like Solana and Vine recently surged, drawing significant media attention due to their rapid price movements. Historically, Bitcoin has served as a benchmark, influencing investor sentiment and market dynamics. When large-cap altcoins trend more aggressively than Bitcoin, it often signals a shift toward a more speculative trading environment, which can lead to increased volatility. Conversely, if Bitcoin's price begins to falter, the entire altcoin market may face heightened downside risks. Therefore, Bitcoin's health is crucial for the overall crypto ecosystem, as it dictates risk appetite for investors. Analysts suggest that Bitcoin's resilience during this altcoin volatility is a sign of underlying strength. As traders closely monitor Bitcoin's performance, its next moves will be pivotal in shaping the market's direction and investor confidence. A decisive breakthrough could solidify Bitcoin's dominance and stabilize the broader cryptocurrency landscape. Ethereum has witnessed a remarkable surge in ETF inflows, with a reported $240 million flowing into Ethereum ETFs in just one day. This influx marks the 18th consecutive day of inflows, totaling an impressive $1.25 billion since May 16th. Such sustained interest from institutional investors underscores a growing demand for Ethereum among major players in the financial markets. This trend is particularly significant as it follows increased regulatory clarity surrounding cryptocurrency investments, which has encouraged institutions to dive deeper into the space. The increasing accumulation of Ethereum by institutions not only reflects a bullish sentiment, but also positions Ethereum as a focal point for future investment strategies. As institutional players secure their positions, they anticipate upcoming technological advancements, such as Ethereum 2.0, which aims to enhance scalability and sustainability. The momentum behind Ethereum's ETFs may lead to further price stabilization and growth as institutional confidence builds. With institutional inflows showing no signs of slowing, analysts predict that Ethereum could solidify its status as a leading asset in the cryptocurrency landscape, potentially reaching new all-time highs in the coming months. Kenya has made headlines with its recent Finance Bill 2026, which introduces stricter regulations on cryptocurrency reporting and digital payment taxes. This legislative move signifies the Kenyan government's commitment to regulate an industry that has seen explosive growth in recent years. Globally, governments are increasingly seeking to impose transparency and accountability within the cryptocurrency space, as concerns about fraud, tax evasion, and money laundering rise. The tightening regulations in Kenya are part of a broader initiative to enhance oversight and ensure compliance among crypto businesses operating in the country. As the Kenyan government aims to create a safer financial environment, these new measures could set a precedent for other nations grappling with similar issues. The implications of Kenya's regulations could significantly impact how crypto businesses operate, potentially influencing investor sentiment and market dynamics. Stakeholders in the Kenyan cryptocurrency market now face the challenge of adapting to these new requirements, which could reshape the landscape of digital finance. Looking ahead, the effectiveness of these regulations will depend on their implementation and enforcement. If successful, Kenya could emerge as a model for regulatory frameworks in emerging markets, balancing innovation with necessary oversight in the evolving digital economy. The global cryptocurrency market is currently facing a wave of uncertainty as various factors converge to impact investor confidence. In recent days, significant price fluctuations across major cryptocurrencies have triggered a reevaluation of market strategies among traders and investors. This volatility is particularly pronounced with altcoins, which have exhibited both dramatic gains and unexpected losses, leading to a climate of apprehension. Investors are increasingly cautious as regulatory developments and market sentiment shift rapidly. The recent tightening of regulations in several jurisdictions, including Kenya, adds to the complexity of the situation. As governments worldwide impose stricter controls on cryptocurrency activities, market participants are grappling with how these changes will influence their investment decisions. Additionally, ongoing discussions around potential exchange-traded fund ETF approvals, and institutional interest in various tokens are creating a mixed sentiment that complicates the market landscape. This environment necessitates a careful analysis of both risks and opportunities for investors. The impact of these regulatory changes could reshape the competitive landscape, creating barriers for smaller players while potentially benefiting larger, compliant entities. Moving forward, it is essential for investors to remain vigilant and adaptable, as the evolving dynamics could present both challenges and new avenues for growth, particularly in the realm of decentralized finance and emerging blockchain technologies. Thank you for tuning in to today's top stories in the cryptocurrency world. Which story surprised you the most? Don't forget to like and subscribe for more updates.